So how are you guys? As we all know, we took this trade in the London session, right? I gave it the signal at 10 a.m., a buy order limit on gold, and then it just came and uh, l- it was liquidated here, right? It just came and took us into the trade at around 12, right? Was the signal was given at 10, which is about 2 hours later. That's when it played out. So we are currently in this trade and gold has been so lagging. I mean, I think all of the markets has just been so lagging, right? Since yesterday, there are no big moves, right? The markets are just um, going sideways. They are very slow for those people who maybe swing traders or intraday traders, like maybe for scalpers, that's what they like. So on this, analyzing this one, right? What caused us to take this trade was that in the 4 hour, my strategy as usual, right? In the 4 hour, um, if I put my three exponential moving average in the 4 hour, it was showing an uptrend. 1 hour uptrend, 30 minutes, it was showing an uptrend, right? The EMAs were not yet what smashed together like this. So on my trend, I had a confirmation. Then looking at the market structure, right? In our 4 hour, we are seeing that there's a what? A head and shoulders pattern, right? Then there's retest of what? Of the neckline of the head and shoulders pattern, and then there's an upward potential. So I was pretty confident with that move. But as we can see, if we come back in the 30 minutes where we wanted to execute our trade, we can see that the bigger candles are the bearish candles, which is not good for this trade. The bigger candles should be the what? The bullish candles to show that there's what? There's an upward potential. Like from when we entered the trade, there's a big bearish candle, a small bullish candle, a small bearish candle, a big bearish candle, and then there are small bullish candles. All five of these candles, they were swept by this one, right? All five of these bullish candles again, they were swept by this one bearish candle, which is not very good for what for this trade, but we are just going to what to keep holding on. So looking further into the analysis, like when I'm looking at my strategy, right? I look at trend, area of interest, additional confluence, and what entry signal. Sounds simple and basic, but as a trader, right, you should do your top-down analysis like I did right now. I first got into the 4 hour, into the 1 hour and 30 minutes. Sometimes I even go further to look into the daily chart frames to look at what was the previous daily low, what was the previous daily high, right? And those th- those order blocks or those key areas, they just guide you in your trading, right? It's not just don't take uh word for word what I say and say trading is I'm just going to execute. Like if you look at my strategy, right, in the playlist of my strategy concept or in my book, right, when we are talking about key areas of interest, sometimes we also use the Fibonacci retracement, the fair value gaps, right? Today I was also using the fair value gaps, but it has now been a long time since I had mentioned them. So you see that a lot of things come into place, right? They are not always being used, but sometimes you just see that there's a fair value gap here. And sometimes you just see that it's about 60%. Then you just pull out your Fibonacci retracement to make sure to confirm that it is a what? A 60% retracement into a what? Key area. So this is how I analyze the charts. It's not just those 4 things like my moving averages, uh, demand and support. a chart pattern and a bullish candle. No. I also look at weak candles, the morning star patterns, like some things I don't mention them, but they are what they are used on some of the trades. When you see me now just giving you a signal, there are those things that I use, right? So going on, let's look for what we are going to have here. So this one, I knew that this trade we're going to have it in the what in the New York session, but it just didn't give an entry signal because I knew that on this level it was going to pull back. If it was not going to pull back on this level, it was going to pull back on the psychological level, which is 1.32 thousand, right? So if we analyze this chart here, right? If we analyze this chart, we can see that it was going in a downtrend, right? Gold and GBP, yes, they are giving me trend reversal vibes, right? So it was going in a downtrend, but whilst we are in the 4 hour, we can see that it is breaking the market structure, right? It broke this high, yeah, like first reversal, first reversal signal was this kind of head and shoulders pattern here, right? And then there was consolidation, right? And then liquidation, and then it what broke the previous structure. Now it is coming to retest. So when we go back into the 1 hour, you can see that where it was giving a lower high, it was broken, right? It broke that lower high to make a higher high, and then a higher low. No more making lower highs and lower lows. And then when we look, the main thing that made me highlight this, in our 1 hour, there's a fair value gap, right? When it changed the market structure, it gave a double bottom and came. So the neckline of this double bottom is here. That's why I was suggesting that it would come on this psychological level, which is also the neckline of the double bottom, and and continue. Or just retest the fair value gap. If I zoom in my chart, you can see that there's a fair value gap in the 1 hour, in the 1 hour time frame, just after the trend had changed, no, just after the market had changed its structure. So just after market had changed its structure, it formed a fair value gap, which is a key area of interest, right? This fair value gap is also a neckline for the uh, head and shoulders pattern, which is happening in the 4 hour, right? So it was confirming an uptrend. What we're now waiting for is a signal in the 30 minutes or in the in the 15 minutes. It did not give any signal. It just started going up, right? There were additional confluence, trend, area of interest, which were coinciding, but it just didn't give the entry signal and just left us, well, which is fine. That's how the markets are. Sometimes you don't even see any candlestick pattern, right? So we are just going to move on GBP USD. We are going to wait. Today the markets are very slow, but we are just going to wait. If it pulls back to this level, we are just going to to buy. So we are now taking our first signal, which is a buy limit order. The entry price is 1.3216. The stop loss being 1.319, and the take profit being 1.3286, right? This is our first signal of the day, right? Uh, until further notice, this is what we are just going to be using because it might go up and retest on this psychological level, which was a support zone on our previous on our uh, on our preview on the previous lows here. So we could take our trade here if the price continues to go up and comes back to retest. We would take our our entries here. I'll give you the signal right there. And then on GBP JPY, right? Top down analysis, I'm just going to look in the 4 hour, right? The 4 hour, one hour, and then the 30 minutes time frame, and then the 15 minutes time frame. So you can see that we missed the trade here. It's all well and good, guys. Yeah, there's no need to rush. It's all well and good. We missed the trade here, which happened in the London session. You can see there are very many weak rejections here. We could have taken a trade here with a stop loss of 15 pips because today the and yesterday also the graphs are non, the prices are not moving that fast, right? There is no volatility in the markets, right? We move on to our next pair, which is USD JPY. So going back to top-down analysis, 4 hour, right? This is a very steep uptrend. There's now consolidation right here, forming almost a triangle or a bearish channel. Forming almost a bearish channel right about here. Then we move on to the 1 hour, right? 1 hour, 30 minutes, and what? The 15 minutes. So now we just want what? To confirm because this might be a counter trade we are going to take right now. 4 hour is upward, 1 hour is a downward, a 30 minutes is a downward. So 1 hour and 30 minutes coincide. 1 hour and 30 minutes are coinciding. This is our first trade of the session, right? So I'm expecting the graph to respect the channel as well as this key area, right? Let me just delete this channel to reduce noise. Uh, to respect this channel as well as this key area, let me just see if I draw a trend line. Yeah, it might come and respect this trend line. So this is if price moves, if price moves fast, right? We are going to enter on this trade, right? A stop loss of 15 pips again with a take profit of what? 45 pips, right? So if I draw my position here, stop loss of 15 pips and a take profit of what? 45 pips because there's no volatility in the markets. There's no a lot of what volatility in the markets. Here it's way too expensive to sell here, right? Even if it might seem as if there's consolidation and there's a bearish momentum, right? It's too expensive because you might be liquidated as it goes to the what? 1.56500, this psychological zone, this psychological area, right? 1.6500. You'll be liquidated, and with our 15 pips, small stop loss will be liquidated and taken out. And then the graph will start what? Continuing in the desired direction. So as long as it doesn't reach here, do not take this trade, right? We are just going to be what? Waiting for it to come at this area, which is 156,500, right? And then on AUDJPY, those are the only five pairs I trade. AUDJPY, if I look in the 4-hour time frame, in the 4-hour time frame, there's a steep uptrend also here. It's not very steep, but it's a very good uptrend. And then there's a double bottom here. So let's just go into the smaller time frames. This graph is not moving. This graph is not moving nicely. I'm not looking forward to take any trades here. But without even putting our trend confirmation, you can actually see the 4-hour is uptrend, 1 hour uptrend, and 30 minutes uptrend also, which is a very good, um, which are very good which are very good confirmations that we should be going up. But because of the momentum of this graph, right, in terms of entry, we are looking forward. We are looking for the graph to come around this area for us to what? To execute our trades, right? Or we are looking for it to come around this price. You can see I'm highlighting where there is where the uh, price touches most of the times. This is a line where the price touches most of the times. First touch, second touch, third touch. It comes here and gives a fourth touch. So around this area, 1, 2, 3, 4 touches, 5 here. Around this area, we are going to be looking what? For a buy. But with the momentum of this graph, it's going to be a bit difficult. We are going to be looking for what? For buys. On price 101.949. We are going to be looking for buys. So everyone, I all know that you are in the Telegram channel where I send the signals. So I'm just going to be sending you signals, right? This is the analysis. Currently, we are not entering any trades. There's no enough volatility to what? To execute any trade, and we are far from the what? Area of interest currently, right? Except for gold, which we have already what? Which we have already just entered. Those who had not yet entered gold, the price is still good. People can still enter. Yeah. This is the only trade we are taking in the live session. People can still enter. Trade on gold, right? Trade on gold. But your stop loss will be no more 200 pips like me. It will be now about 230 to maybe let's see the stop loss if you enter right now. Yeah, 230 to 250. 238.8. So that's it, guys. Uh, since there's no much of trades whilst we are waiting, let me just emphasize on something. All right. You see, let's try to use risk management when taking these signals. You can see that on all my trades, every trade I take, all right, if I'm opening two positions, why do I open two positions? So that when I say close partials, I can only close what? One trade and let the other one what? Go whilst my uh stop loss is now what? Already in profit. Maybe it will be a 1 to 3 trade and we are on 1 to 2. I can close one trade and then let the other one what? Let the other one play. All right. What is it that you must do? If your stop loss, usually I don't like people, it is not recommended. All right. It is not recommended to take a stop loss of more than 3%. If you are taking a stop loss of 3% per sitting, right? I don't take 3% per sitting because I take maybe 2, 3 trades uh, per, per time, right? So if I take one trade 3%, it means I no more have a chance to take what the other two or the other one trade. So you should take at least what 1% stop loss, right? So that you practice for these funded accounts. If you take 1% stop loss per trade, if you are profitable, I'm sure you'll never blow your account. If you blow that account, it means you're not yet a good trader. It simply means you're not yet what? A good trader. So if you are taking 1% stop loss per trade, which is the general rule of my channel, which I say, I recommend, you may do what you want, but it, I recommend right, that the best one is to take what? 1%. As for me, I'm very conservative because I know that my strategy, I may lose 6 times in a row. So I wouldn't want, let's say I use funded accounts, all right? Currently, I have three funded accounts, one 15K and two 10K accounts with funded next. So I wouldn't want with to be in a drawdown of 6% when I know that the trade limit is what 8% of my account. The maximum drawdown they would want is 8%. It doesn't make sense. So if I lose, let's say 6 trades in a row, because according to backtest, I know the maximum number of losses I have done in a row. There were six. So let's say I've done 6 losses in a row, risking 0.5%. It means I'm in a drawdown of what 3%. Right? I still have 5% to blow the account, which it has never happened. In all the cases, I have never had 6 losses in a row. Right? I've never done that. Only in backtesting that I have what seen those accounts. So we just take precaution measures, right? We are just precautious. We just take what preventive measures, because in the long run, being a good trader is first being able to protect your capital, then make profits. It's not only about thinking about money. This is the problem with beginners. They are always thinking about money. When they take a trade, they are always shifting stop losses, right? They are thinking the trade is might go in their way. It is not possible that they've been wrong with the markets. No, you're wrong. If you're wrong, you're wrong. You should what? You should never adjust stop loss. Only adjust take profit and not reducing it. Only going upwards. Why? If you reduce your stop loss, let's say today you reduced your take profit to 1,5. It means if you risk $100, you're going to get 150. And yesterday, your take profit was 1:2, which means you risked 100 to gain what? 200. Right? Tomorrow, you put 8 take profit. Once you are risking again what? $100. You see, it no more makes sense. You no more know the uh, win ratio you have. Like, if I lose these amounts of trades, I need these amounts of trades to what? To gain back my profits. Do you get the sense? Like, if you reduce your take profit every time, right? Like, as I have said, you no more have a fixed amount of take profit. You know that, let's say, if I lose three trades in a row, I know that I only need what? I only need 1.5 trades to gain that, because usually I take my TP at 1 to 2 risk to reward, right? 1 to 2, 1 to 2.5, 1 to 3. 1 to 3 point something, but mainly my trades are 1 to 3, mostly taking what? Partials on 1 to 2. So it will be around 1 to 2.5, 1 to 3. Sometimes I don't take partials, I just leave them to go to 1 to 3. But I know that what is my uh, minimum take profit I always get per trade. I never close a trade when it is less than what? 1 to 2. So I know that when I lose three trades consecutively, I know that I only need two opportunities of profits to what? To get, which is I'll be already in profit. I'll be no more in drawdown, because I only need 1.5 trade to what? To gain back my what? To be at break even. The other half, I'll be already in what? In profit. So, as I was saying, if you like opening multiple positions, maybe it's $100 stop loss, which will be 1% of your account, assuming it is a $10,000 account. 1% will be 100. You can open four positions, each with $25 stop loss, right? Or you can open two positions, each with what? $50 stop loss. And you don't put it exactly at 50, right? You put it at around 48, 49 because of spreads, slippage, and sometimes commission, right? And also, and if you are able, right, to do this consistently, right, each and every day, and you show consistency in your work, these prop firms, they are part of the markets. They are always going to be there, right? They are not going anywhere. It's part of the business, it's part of this industry. What you shall not see in the future industry as the prop firms get more regulated and stuff, right, are those the large number, the majority, right? The large number of traders who have prop firms right now. Because a person with a prop firm, they might buy a prop firm, which is a 200K account for $1,000. They buy 6 times and blow, which means they spent $6,000. Then they pass one account and pass it with a what? With a 12%, which will be about 24,000. What? 24,000, 24K profits. When we subtract that using simple maths without any commissions or any other expenses like exchange rates and stuff, using simple mathematics, 24 minus 6, it means they have what? 18,000 in profit when they have blown six other accounts and only passed what? And only passed one challenge. You see? So this is what is happening in those in the with the majority of those who trade. It's people who already have a lot of income, right? And they only need to 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 only pass only maybe once out of 10 times. And they what? And they so these people, they risk a lot, and most of them, they do not have a defined strategy. So without a strategy, right, you won't stay in the game for long, because you won't be able to adapt, right? These markets, they need someone who has a strategy, because the strategy, it is sustainable. It is different from gambling and these flippings. They are not what? They are not sustainable. So if we look, right, as beginners, you should know profit and losses. Losses are part of the game. Losses make us have profits, because as we look at those areas, we can also what? We can also learn, right, from our mistakes, that this is what I was supposed to do. Every time I play chess, right, the time I learn more is the time I lose, right? When I win, there's not much learned, but when I lose, it quickly gets into into the uh into the memory, into the into the long-term memory, that I should never do this again, right? It's like a punishment. It's like when you touch a hot plate whilst you are a kid, that memory, you will never touch it again because you know that you'll be hurt. So this is how I learn while playing chess, and it is the same applies to trading. When we get losses, right, you can see that this and this and this is where I made a mistake, right? So losses are part of the game. Beginners always want to win. Say win, 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 win. We are not always winning. Losses are also part of the game. What you see on YouTube and those influencers on all the other channels saying that they have this type of strategy 100%, you should look, you should ask, and require for evidence that they are making money, right? Because in the long run, to be a great trader, just to be a trader, you should be making uh a substantial profits from the markets, whether it's prop frame or it's your real account. As long as money is coming from this whole industry into your bank, right, without selling courses, without selling signals, or selling YouTube or stuff, just by looking at the charts, executing a trade, and in the long run, the profits will outweigh the losses, right? You know that you're a great trader. Because a lot of people can analyze these charts. These charts, they are very, there is a number of intelligent people around the world. To be an analyst is very easy, but to execute, it is now mixed with emotions, trade management, how you handle from entry to exit. It is now also entangled with greed. And there are a lot of things which are which are considered. To be an analyst, I can be an analyst for maybe 30 minutes each week, 30 minutes per week. But to be profitable now, it depends, right? To be profitable, if you are a swing trader, you can't be analyzing the charts for 30 minutes a week unless you maybe took a trade in the first week and then you are just maybe looking at it uh, every day, maybe only 2 minutes to check the price and adjust your trailing stop. But to be an analyst, you can do that 30 minutes every week and it's done. But to be a trader, right, it's no more about teaching. It's not about executing. You need a lot of time, right, on the market. Not a lot of time, like you may need only 2 to 4 hours per day, or maybe 30 minutes per day. And 30 minutes per day, it's around 3.5 hours, 3.5 hours per week, which is what I was saying, that when you're an analyst, it is very easy, more than more than real trading. An analyst does not make money on the markets, but a real trader is the one who is who is making profits. As long as you are now making profits, right? As long as you are now profitable on the markets, executing trades, your profits outweighing your losses, and withdrawing or getting payouts from profits, you are you are already um a profitable trade. So let's just look on our charts how the graphs are going, and we'll be executing. When we are now executing, I'm just going to be uh I'm just going to be telling you guys, I'll be just giving you signals because it seems of all the charts we analyzed, there's no chart which is going to what? Which is going to come into our area of interest. What I've discovered is that when I trade GBP USD and GBP when I trade GBP JPY, USD JPY, and AED JPY, most of the times they have a strong correlation. When we say correlation, we mean that the pairs, when this pair does this pair should also do this, right? It might lag with about 30 minutes, 1 hour, or 2 hours, but eventually it will be doing that. Even the patterns may be seriously similar, right? They may be seriously similar, but what makes them different is that this one, it is now having a what? A base currency of the pound, and this one of the USD, and this one of the Australian dollar. What is happening in Australia is not what is happening in what? In Britain or in the UK. So, for example, yesterday there was a strong news for AEDJPY. It just went in the other direction, leaving these other two. So you must also watch out for these correlations, right? Most of the times when I take a trade on one of those pairs, usually I do not take a trade on the other pairs because it's either going to be what? Two losses, right? If you are correct, if you are wrong, it is going to be two losses. But if you are correct, it's going to be two profits. But we do not want to take what? We do not want to take the chance. So in fewer cases, for example, today when you see that there is no much correlation, right? It can easily be seen with the chart pattern. You can easily see it that there's a strong correlation now and there's no strong correlation right now, right? Like GBP JPY and AED JPY, they seem to have a correlation. Hence, they are what they are buying. What's AED, USD JPY? We are looking for what? For sales. So this is it, guys. We are waiting for this. We do not rush the markets. We are waiting for this market to come to our area of interest, and then we sell AUDJPY to come to our what? Area of interest. We buy GBP JPY to come to our area of interest. We buy GBP USD to come off our area of interest. We buy. In gold, you're already in the trade. So we have done our best today. We try to wait for the markets, but they are just not playing that well for today. So until next time, guys, peace out.
So guys, just an update on our live session trade that we took yesterday. Um, Yesterday on Thursday, the markets were not having a momentum. The momentum is too low, right? The momentum is too low, but our moves were taken. Just yesterday on the live session, our trade on the live session was on gold. We told people to enter on gold, and so far our trade is in more than one to two right now. Risk to watch. Just to make sure, let me just do this. Just to make sure. Right now it's below 1 to 2, but the last I checked it was at 1 to 2.2, which is too fine, right? Which is too fine because we are aiming for a 1 to what? 1 to 5 risk to reward. So let me just adjust here and put it back on 1 to 3. Show you that this trade was a success, right? Because this was the original trade. This was what? The original trade. So moving on, let's go to GBP USD. GBP USD, we're expecting it to come back to our part this price. It did not come back, so we did not execute that trade. On GBP JPY, right, we said we take buy limit orders from me. So right now it is in a 1 to 2 it is about to close. So we have already taken our partials, right? Because it has already uh, passed the 1 to 2 So we took our partials on 1 to 2 and left the other profits just what to flow to up to where they can take us, right? And then on USD JPY, remember me putting this line, you can see how this trend line was respected. If we put our graph in the 1 hour, you can see how this trend line was respected, right? Going in our 30 minutes and 15 minutes, I told you at this area, right? You, as long as you were present in my live session, I told you this. That this area is when I'm looking for a what? A sale. It just came to that straight area if we extend this bar. It just came straight to that area. Was about to take us out with, with a stop loss. This is why I don't usually like what sell orders because you don't know what will be happening on the markets whilst they are not there, right? It might not confirm a candlestick pattern for you to end. But for this session, we took orders because during the session, it was around this time. During the session, the graphs did not have any momentum, so we're taking orders. Right, we took our sell order 1 to 2 TP hit, which means we closed partials. Right, we closed 50% of our position and let the other position what and let the other position right with a stop loss of maybe 1 to 1 or the previous low. Right, just using the trailing stop. Right. And on AUD it did not follow our orders. Right. We were expecting it to come at this position and then we buy it. It did not reach that position. So we did not what? We did not enter the trade. So this is just the update, guys, on the trades that we have yesterday. Make sure you uh, attend this attend the live session, guys. You can see how much value they have. Let me just show you an update. Alright, an update. You can see I share this trade with my community. Right now, I was just giving uh, them early in the morning where our gold was before it had hit 1 to 2 reached to 1. This is where it was. It was around 1 to 1, right? Early in the morning. And I was just giving an update on the trades that we took on the live session right here. You can see when it reaches 1 to 2, that's when we close partials or we just leave them. Personally for me, gold I did not even close partials, right? I just left it like that, right? We close partials on 1 to 2, right? We do break even on 1 to 1, close partials on 1 to 2, then on 1 to 3, we close all positions or leave it to run until where it wants to take us, right? The markets will just what decide, but we do not extend stop loss. We extend take profit, but we do not extend what stop loss. So also a trade update on gold, right? Break even on gold, keep holding. So I'm going to give a second update right now that gold is more than 1 to 2 risk to reward right now because this was a 1 to 3 trade. So I, I'm just going to what give an update. So until next time, guys, peace out.